This quarter, as we called out, I think there are two, three things that went well for us. One, we saw that the demand in our key industry verticals, which is BFS, tech, and manufacturing, actually started to show some green shoots, and we are seeing a good momentum in the demand in Q1, and we continue to see that momentum continue in Q2 at least for now. And that's resulted into the services growth that we had in this quarter. We are also seeing that all the deals that we had closed in the past few quarters, they've now fully ramped up and also hence shown the conversion of that in our revenue in Q1 as well.
Nachiket, so there's notable improvement in revenue. Give me an understanding of whether this is a flash in the pan or is this sustained recovery that the sector, the company is finally seeing. And the reason I ask you this is because up until last quarter, while the indication from the whole sector was that there are green shoots, it hasn't really translated into significant growth on top line. So help us understand this. Is this here to stay or is it too early to call it a recovery?
So for us, the demand, especially in the BFS and tech sector particularly, is driven by two main factors, right, that we called out in the earnings call as well. One is we've all definitely been on the right side of vendor consolidation in the key customers for us in both of those sectors. So hence the demand that the customers have started to spend on prioritized project instead of getting distributed to large number of vendors, it's coming to us as one of the preferred vendors for that customer. So that's what we've seen changing the trajectory of demand for us. Second, as customers have now sort of baked in the macroeconomic environment into their planning assumptions, they have prioritized the spend that they needed to do on modernization in order to get them ready for the AI adoptions that all of them are planning for as they want to maintain their competitive edge. And that has resulted into spend being in the data, digital engineering, and enterprise apps portfolios, because that's where they're preparing for the enterprise-wide AI adoption. So these two factors has reflected in the demand that we see. So the nature of the demand is not discretionary, and hence we feel that the projects or initiatives that the customers have embarked on will last for a 12 months or 18 months time frame. The engagement model is more pod-based or more sprint-based funding, and hence it doesn't reflect in the TCV. But so we do believe that the demand is not short time, but it will, at least the programs will sustain that for a 12 to 18 months. And that's what gives us the confidence that in these sectors, we are also looking at a full year also, we would see that momentum continuing.
Nachiket, help us understand this, right? So while deal closures have happened in this quarter, how long have these deals been in the making or the cooking for? What I want to understand is, do you feel like over the last 1 to 2 months, the sales cycle is also reduced now, which could again be a positive trigger?
I think the sales cycle probably haven't reduced, but we definitely are seeing decision-making improve. So the decisions are getting closed, faster, where customers now have a clarity in terms of their spend patterns and the budgets that they're going to spend through the remaining of 24. And that kind of then accelerates the decision making there. I think that definitely we see an improvement. But the outsourcing or consolidation deals, I think that cycle still needs that, those 6 months or 9 month cycle on for them to construct a deal, go through the process, select a vendor, do contracting. I think that continues to be as it was, but the decision making is definitely faster.
Keeping that in mind and taking a cue from what you said, at least in the US, the expectation seems like Trump could be making a comeback. Now, we all know that Trump is good for business, so it's great for a company like yourself that sells in the US. Do you feel like those conversations have picked up now? Because if that is a few months out, then are you talking to a lot more clients and customers today than you were, say, a month ago? More inquiries coming in?
Definitely, there is a momentum and there is definitely increased activity. And I think from most businesses, apart from one government or the other, I think most businesses want some sort of a certainty. And if that picture for them is improving, then it will help in their decision making cycles as well. But I would say it is still too soon. But we do expect as we get into closer to September October timeframe, when customers start to discuss about their calendar 25 budgets and plans. I think that will give us an indication as to how positively or negatively are they viewing these changes. It's today, I think in 24, what we see is that they're at least unlocking whatever they have planned to spend in 24. As we come closer to our Q3 and calendar Q4, we will get a perspective on how they're thinking about 25.
We're trying not to get too excited then in that case. Nachiket, let's talk about margins, because the consensus post earnings was that while revenue growth is looking healthy at this stage, there's an uptick on most verticals barring healthcare. Margins are a little soft. Can you give me a sense of the trajectory of margins? And if there could be some more pressure that we could see on margins for this new financial year, or you think you'd be able to manage and maintain this current range?
I think we'll be able to manage and maintain the current range, and we are actually looking for some improvement as well, as we had called out, and that margin improvement plan continues. This particular quarter, I think if you look at a quarter-on-quarter basis, there were some one-timers that definitely soften the improvement in the margin. Vipul called out those. So we will continue to, progress on that margin improvement plan like what we have shown from Q4 to Q1, and feel confident that we'll be able to not only maintain, but maybe definitely slightly improve it on a full year basis as well.
Yeah. Nachiket, let's talk about Gen AI. People outside your business understand very little of it, and I talk for myself over here as well. What we believe is that clients are restarting high priority transformation projects in some areas, and you lead the industry when it comes to data engineering and ERP modernization. You want to give me a sense of what that space is looking like? What is the sort of growth, conversations that internally you're setting out for yourself?
So one of the key things that the customers are looking at from an AI adoption perspective is from POC to organization-wide adoption of a particular AI use cases require them to have 2-3 things sorted out. The first is they have to have a platform-centric approach to make sure that individual functions and departments and countries or regions that are implementing specific use cases, they still consistently deploy the security and the responsibility frameworks, because otherwise the nuances of AI will be much higher than the benefit it will deliver. So they have to take a platform-based approach where consistency in these deployments is addressed. So that is one kind of demand that's that is giving rise to the digital engineering type of spend, as we are helping customers build these platform within their enterprise for AI adoption. The second thing that they have to do is they have to get their data strategy right. So these POCs have worked on a certain set of data, which was sample data, specific set of users to prove the value. But as you want to now expose the entire enterprise data to it, you need to keep in mind the data governance. You should be able to establish data lineage. You need to be able to explain the algorithm outputs, because many of these are regulated industries where it's important for them to show as to why certain things were recommended by the model. So the traceability of that data is also important. And of course, the adoption of this by a large set of users getting embedded into the process itself. So that is also giving rise to a significant amount of work on the data side on modernization that they need to complete. And that's where I think a large part of our demand in these service lines is also reflective of this work as enterprises are getting ready for AI.
Are you anticipating an increase in cost as well for the financial year, Nachiket?
Increase in cost for us?
Yes.
So I think we are planning to do our wage hike cycle in Q3 as DC called out yesterday. That will mean there will be increase in our employee cost base, which is the biggest cost item for all of us in Q3, Q4, a second half of the year. So our plan is to make sure that our margin improvement plans in the Q1 and Q2 then make the room for that increase that we would see in Q3 and Q4 and still able to maintain our margin performance like what we have guided for. So that's really the plan, and hence we'll continue to focus on those initiatives in Q2 as we prepare for the H2 increase in wage.
Right. Nachiket, that was exactly what I was trying to understand from you, because if margins are going to be, under pressure, then this is only going to be an added problem. But clearly, you've got a solution to it. Also, very specific question: are you feeling a lot more optimistic today than you did 3 months ago?
Definitely, I think the demand picture is better than what it was, say, February or March timeframe. Definitely, we're seeing a lot more activity, a lot more positive momentum, especially in the three sectors that we called out. So yes, much better conversation with the client in these three areas.
Right. Also, in terms of the next couple of quarters, which verticals and geographies are you expecting to take the lead in terms of growth?
So BFS would continue to be a key growth driver for us, at least in the next 1 quarter, for sure, that we have the visibility on. And I mean, for us, I think if you look at our largest geography, which is North America, and three large verticals that I talked about are the tech and BFS and manufacturing, I think we'll see that at least for next 1 quarter, these three verticals in North America will continue to lead the growth for us.
Right. Nachiket, it'd be unfair if I let this conversation wrap without asking you acquisition plans. I know your parent company is sitting on huge cash and you're always on the lookout. At least, and you've been very clear about that as well. Anything in the Gen AI space that you're currently eyeing, either in India or internationally, any synergies, any announcements that we can anticipate, even if they're just conversation at this stage?
So as we said, we continue to look out for right targets, and we, at any given point in time, we always keep evaluating the right candidates for those. Of course, AI is a big area of focus. Within that, we would definitely look for right complementary solutions. It could be technology solutions. It could be specific vertical solutions that would be of interest to us in the AI, Gen AI space. We don't have anything that we would plan to announce in the short period of time. But as you know, on these acquisitions, it's very difficult to predict which one of them will come through and which we won't. So we'll definitely announce it as we come closer to that. But there is definitely a increased intent to explore some of these specific acquisition areas during this financial year.
Right, just very lastly, Nachiket, LTIMindtree now is a big boy on the table, right? It's a company no one can ignore anymore, and you're a big player now and significant in that sense. But the acquisition, of course, did its number on you as well, where things were tough. And there was, of course, a retention issue in top management, which is obvious because when we have two big companies merge, it's only par for the course. Is it fair for us to assume that everything to do with the merger now is finally behind you, and now, as a single entity, you have it under control?
Yes. So our processes, systems, org structure, teams, I think all of that is now settled. I think the last 6 to 9 months, I think we've been operating as a combined entity, both not only just on paper, but also in reality in terms of how we are executing it.